Hey there, traders. What's going on? Jamie Saettele here with your 618. I just realized as I said 618 that it's this is totally nerdy, but it's Phi Day, PHI, right? 618, 618. Get it? So they say, March 14th is Pi Day and June 18th is Phi Day. So a little nerdiness there for you to get started. All right, so this is the midweek strategy webinar. Obviously, this week doing it here on Thursday rather than on Wednesday, just because we did have the Fed yesterday. I hate doing the webinar right before it because look, I mean, let's be honest, the technicals are the technicals. That's how we trade. But if something completely nuts changes the charts up, and then we have to adapt, and I don't want you to be looking at something that's not going to be viable. So what I'm going to start off here with today's webinar is I really just want to focus on the US dollar in general right now. And I'm sure if you're in here right now or if you're watching the archive that you've probably read last night's swing update. And the levels are playing out really quite well right now, and it is important to have in the back of your mind, the bigger picture potential, right? And as mentioned in that update last night, look, we did have this huge J spike on a monthly basis in April, okay, and here we are in June. And this month, June, is typically or historically has been the weakest month for the US dollar. In fact, I'll show you, let me show you that chart real quick, okay, on the seasonals. Okay, there we go. So if I show you the seasonals for the ICE dollar index, which obviously has like 30 years of data on it, so it's a good one to look at. This is month by month, January, February, March, April, May, June, July, August, September, October, November, December. All right. Basically, the higher the bar, the more bullish that month, the lower, the more negative. And this goes on 30, 20, 15, 10, and 5-year studies. So you're getting a snapshot. If you want to know how the dollar's performed historically over the last 5 years, you can just look at this top one. If you want to know how it's performed historically over the last 30 years, you look at the bottom one. Well, every single one is red for the month of June. Okay, even in fact, the 5-year study is very red. It's overly bearish, which is very interesting because obviously the dollar's been either sideways to up since 2008 and notably since 2011. So, this bearish seasonal tendency is indeed playing out. And, as we look at this bigger picture chart, the bit where you would expect just on pure, median line slope analysis, if you will, okay. You would expect, actually I had that drawn a little messed up, after you get to an upper parallel as we have, and again, notice that my analysis is not, I'm not mentioning anything about Greece here, right? We're going on slope analysis here and, kind of studying the market's price and how the market's trading. So if we were to, just not knowing anything, just going straight on this, on median line analysis, what happens when you get to the upper parallel as we have and reversed from it is the first place you would look typically for support within this long-term bull trend would actually be the median line, okay, the black line. Now I have sliding parallels here too, right, because they could very well provide support, and you don't want to miss that. But in general, this clusters around the year open price, 11,550. So look, that's a ways down. In the in the US dollar. Just let's see, where two equal legs would actually be 11,516. So that area is a big one to know. And you know, if you're wondering where that would put the euro dollar, it probably puts it at around 120. All right. Am I saying this is what's going to happen? No, but is this vision, you know, implanted in my head? Yes, it is, because the technicals are really lining up, right? As far as seasonals, as far as measurements, as far as year open prices, which are important in the median line as well. All right. So in a perfect world, we stay long, we don't get shaken out of euro dollar all the way up to 120 or something, and then we flip to the short side, right? After everyone's thrown their hands up in the air and is like, screw this, euro goes up, even though there's all this crap going on in Europe and the Fed's going to raise rates and blah, blah, blah. You know, and then once they capitulate, we can go the other way. So that's kind of what I'm thinking in the very, very broad scheme of things. But, you know, this is a monthly chart, but look, this could all happen within the next couple of weeks. Okay, I'm not, you know, saying that this is going to happen over the next many months. This could be pretty soon, okay, with the way things are trading and the way the dollar's trading in general. Okay. Now, if we were to say break this median line, it's looking way out in advance. But if we were to do that, then, you know, we'd be, you know, we could really fall apart with the dollar. So there's the general dollar picture. I also want to show you real quick. I was showing some guys on the desk here last night this chart, and I haven't really, I haven't looked at this in a while. This is, okay, here you go. So this is an analog. I've been following for a really long time. You know, really for once we broke out last year, kind of following it. And the blue line is the last great dollar bull market. Okay, it's lasted 10 years, 1991 to 2001. All right. The red one is 2008 to now. And both they're pretty similar in the fact that, like, you know, in 1991 you had a coil. If you look back at the chart on the ice, it was a big inverse head and shoulders pattern. And what happened was you broke out, okay, right here, you know, about 326 weeks into the pattern, and then the market really took off on the upside. Okay, it was not nearly what we've had, you know, in this run. But the point I'm getting across here is that there were some severe hiccups along the way, right? And it really started around this time within the 10-year bull market of the dollar, being, you know, a little over halfway into it, right? And you had a severe decline. I mean, this, you know, so the point is, within a 10-year bull market in a currency, you can have really major corrections, and you know that might be what's underway now. So understand that within the confines of euro bear market, dollar bull market, you know, trading back to 120 plus really is within the confines of a big euro bear market is not that big of a deal. Okay, we went from 140 to 104. Okay, so back to 120 would be about a 50% retracement, which is completely normal. Okay, so, you know, just understand that as well, this really big picture deal. Okay, so now let's get into the stuff that you probably want to see. You're like, you know, Jamie, stop showing me all this monthly crap and weekly charts, analogs going back to the 90s. Let's look at where are the trades, right? That's what we want to look at. Where are the trades? Okay, so the dollar has come into support. This is the dollar index, right? This is the US dollar FXCM dollar index. Just the four big trading currencies, Euro, Pound, Yen, Aussie. So we have come into support here. To me, the break that we had yesterday below this line was really important. Make it red. To me, that was a big deal. You know, and I'm looking lower as long as we're below this line. And this line now becomes resistance, okay, if we get back to it. So that's how I'll look there. As far as the individual pairs are concerned, yes, the euro is really pressing the issue on the median line right here, okay? Let's see, 60-minute chart. So I'll go to like a 120-minute, 2-hour chart. So just showing you without looking at a whole lot, like not a whole lot of lines and stuff on the chart, right? Just real clean. So let's look at how the market's trading right here, right now, and I want to compare it to how the market traded last year. Okay, and to do that, I'm going to go out a little further. I'm going to go to a 240-minute chart, and I'm going to go back 18 months. Okay, what I'm going to show you would be kind of the pitchfork at the time that would have been followed, all right? So remember, this is all the way back in 2014. This is Draghi up here, ECB, okay, back in May 8th, 2014, a year and a month ago. So this was the fork that had played out, all right? This was the median line, okay, and just using this as your only indicator, you can see what happens when you break down. It's resistance, break down, went back above it. Once it broke down again, that was really it, okay? Once you break down below the lower parallel, then you got to start looking somewhere else. So this got really severe really fast. But let's compare that to right now. And this is the median line that we're currently working with. So you can kind of, Raj, he's going to ask about the euro. Absolutely, man. I'm getting into it right now. So we're talking about it right now. So this is the median line now, right? And this is the structure we're working with. You can see the break, above, but we haven't broken above it, really since it's been drawn. Okay. This has been when we've, the closest we've been. So this is really like the third test of trying to get above this thing. All right. The point being here is that once we break above this thing, Raj and everyone else, that's when it's, open season on adding to euro long positions, because that's when the acceleration point would look to, we'd look for the acceleration point to occur. All right. And that's when we'd be looking towards the upper parallel. Generally speaking, again, 118.20 is the two equal legs from the low that we registered back in March. Okay, so that's where I know that we're at. Basically, I'm saying we're at resistance here, but it's resistance within an uptrend, which for me, I'd rather stick with the position. The reward on the upside is still high enough to justify staying with it. Again, 118.22, which would really be the first important target, in my opinion, would be the first level, and that's still, we're still talking 450, 440 pips away. Okay, and your downside risk right here is still 112. Okay, that's still 180 pips away. So your reward to risk at this point is over 2 to 1, just on the position that we're already in. Now, as far as support's concerned on this euro, I tweeted it out just a second ago here, but 113 to 113.30 is really the big spot. You could go to break even on this, and I don't think it would ruin the integrity of the trade. But here you go. This is 112.95. You can see this confluence up here is like 113. That wouldn't really be until next week, though. And then just 113, just kind of former high up here. So Raj asked, how do you get such clean support resistance levels? Do you have any indicators? No, my friend. The indicator is price. The method is slope. Okay. This is not, it takes a lot of work. I've been doing this for quite a while. So, experience obviously is key here. But, No, it's like anything. It takes a lot of work. And look, it's still, even if you have all that, trading is still difficult. Okay, but in any case, back to the euro. 113, 113.30 support zone. So something I want to get across is that it sounds like a great idea, to add to this position if we get down into, say, 113 or something. If we trade down to 113 over the next day or two and we get, say, some stabilization, then sure, I'd be happy to potentially add to this trade. All right. But the better option, in my opinion, and you'll get better reward to risk as well, is if we were to get a push up through the median line, we'd probably find some resistance up near the upper parallel. 115.33 is the February high. That would be of particular interest. And then this median line would become support. Remember, we have a specific name for that. It's called the Zoom and Retest breakout, right? We actually had that happen on the Kiwi yen, in fact. Okay, so here's the median line, right? We broke it, and then we continued to bounce into it, and it was resistance. So same idea. That's kind of what you would look for. Not necessarily look for, but if it happened in the euro, that's what would allow you to get really aggressive on getting bullish, or getting more bullish, I should say. So yeah, look, I still like it. I do have a fib here, interestingly. Still like it. Uptrend resistance. It does not mean that we're going to tank. I don't actually have really anything here on the downtrend slope, to be quite honest. The earliest downtrend slope I have on this weekly chart is actually about 116.40, which is the 2005 low. 2005 low, and it intersects with a sliding parallel that is very iffy, but I do have it drawn because it crosses through the gap this year. All right, so something to be aware of potentially. So there is gap risk this weekend, right? I don't know if there is any more, because I guess they just came out with some stupid Greece announcement. But in any case, if there is, median lines, you tend to get gaps around median lines. Okay. It's median lines. If you have the right slope, a lot of times you'll see a gap around it because important things just happen around median lines. Okay, it's a good description of price. And this happened last year. In fact, zoom in here, and do you see this right here? That was August 25th. Okay, and we had been riding lower, riding lower, riding lower, riding lower. We gapped below it. We consolidated. Market started falling apart. So we could potentially get a gap. I want to keep that there. I'll get to, I see some questions. Angela, I'll get to your question in just a moment, my friend. So here we are at this median line. We're coming into the weekend, right? So it's not unheard of, again, for us to have gaps around median lines. And the implication, obviously, everyone in their mother still seems quite bearish from a sentiment perspective. You just go to Google News and type in euro, and it's like everyone's perplexed as to how the euro can rally. I don't see any really bullish headlines yet for the euro. That could change, obviously, but once we start getting really bullish headlines, then then we'll think twice about being long euro dollar. But we could get a gap this weekend, and if we do, we could end up opening up here. So whatever. All right, so I'll leave it at that. We'll go look at some other stuff right now. But euro, bottom line here is that still like the upside. Obviously respect potential, understand that we could indeed trade lower from here. I wouldn't want to see it trade much below 113. I would put 113, 113.30 as support. Want to see it hold in order to stay firm with this position. Want to see a break above the median line in order to add to the position and really get aggressive on the long side. Okay, so now we'll look at the British pound. And I tweeted this morning. This is the same chart from last night, of course. Leon saying, seeing on social media and all sorts of bullish euro analysis. Yeah, I don't know. Let's do I haven't seen a whole lot of bullish analysis, to be quite honest. Euro news. Euro resilient amid Greek crisis. Euro to dollar should be at 107. Growing support for a Greek exit. Here's one that I love. If Greece is in crisis, why is the euro so strong? It's different this time. Here's how the euro is reacting to Greek. Okay. I mean, I don't see anything nuts here as far like if the one of the first things that popped up was like euro resilient amid Greek crisis is fine. If it said like euro surges or something, it would have been a little different. But in any case, the slope lines are still higher at this point. So as long as we are holding 113, I'll feel okay with this. Don't want to see it obviously crack 113 and stay down there for that long. All right, look at the pound. So one thing I had mentioned last night and then retweeted or mentioned again this morning on Twitter is that if you're looking to, take a position with the dollar, in other words, play a dollar bounce, the British pound might be the place to do it. I get that we've broken out, okay, from a major pattern, but as I showed this morning too, we're extended to the point that it's pretty rare. Okay, now you can see here, this will be, I believe it's 12 consecutive days with a close above the close 4 days prior. So we're pretty extended. We've only been this extended once recently. It was April, which ended up being a pretty good top, at least for a couple days. You can see within the bull market, or the bull run from 2013 on into 14, you had this degree of extended advance several times, and they were all pretty good tops. This one, not so much. This one would have been really hard to trade, but you get the point. At the same time, this just doesn't mean the pound has to go down. I mean, if you started shorting here in 2009, you'd be broke. So, we're extended, but more importantly, we're at slope, right? Upward slope. We do have this slope line, which again crossed 2011, 2013 highs. We are above it right now. We do have the 61.8, okay, relationship with the rally from the April to May high. In other words, you would take the rally from the April low to the May high, okay, multiply that by 0.618 and add it to 151.69. That would get you 59.41. So we're getting really close to that as well. We do have obviously Friday tomorrow. So there's always the risk of that Friday high. I like to call it never buy a Friday high. So that might be something that happens if we, kind of squeeze to a Friday high and then they run stops up into 59.40 and then, we'll look to take it lower from there. That might be something to look at on the downside going into the end of the week. And here's the short-term chart. We'll look there. Here's 60-minute pound. Okay, so, very extremely strong bull trend, obviously. This is the Fed bar right here, looking to come back into it. I would peg support here around 57.50, okay, for the euro or for British pound. So risk for me for pound is lower into at least, oh, probably I wouldn't say at least, but into 57.50. You know, some point tomorrow, if you know, or maybe next week. But you've got some slope here that's going to provide support as well. So if you draw, I'll draw along with you so that you can see exactly what it is. Go to a 240-minute chart. So there's several things to watch here, but this one is especially interesting. Okay. All right. Now this isn't necessarily interesting because it doesn't, you know, it's like the median line is or anything else. But when you take the parallel to this, you end up getting, you know, really solid action on this parallel, right? So this is really where I'd be looking, okay? That, and then you have a confluence here as well. Okay, so you have this median line and this sliding parallel, and they happen to meet, you know, 57.50 to 57.70 or so into really tomorrow. So it's kind of like, you know, into tomorrow, later tomorrow. So, you know, might be on the lookout for a short in the British pound into this level, 57.50 to 57.70 for a shorter term trade. Okay, before you look to get long again or look to turn bullish again on the British pound. Another one, obviously, that we like and have liked. Unfortunately, the stop, the trailing stop was hit with FOMC here, is the Aussie, right? And we have an Aussie dollar that has broken out from, you know, a coil that's been going on for basically the entire month. So, you know, there's several ways to count this from a, you know, an Elliott wave perspective. Don't get too boggled down or worried about that kind of stuff. Just understand that we've broken out, you know, and that's important. So we've broken out to the upside. We had really solid median line action here. We had really solid parallel action, very precise, almost to the pip actually, here, throughout June. And these levels now, these uptrends, are really should provide support, okay, if, you know, if Aussie's still heading, you know, up to what I think could be 80.35, all right, towards, you know, the end of June. So that's where I'll be looking. In summary, you know, kind of 77.70 to 77.85 or so, to be looking for Aussie support, okay, for that to hold. And, you know, we'll review this for tonight's, perhaps put it in order for this evening. Had mentioned this was the chart from last night, had put support here at 77.15. It was a pretty good hold as it, you know, Aussie kind of took off on the upside overnight. And, you know, where's Raj? Raj was asking before about, you know, how do you get, you know, precise levels and whatnot. Well, the best levels, Raj, a lot of times are going to be confluences, right? And I make reference to confluences like all the time, slope confluences, right? And that's when you have the intersection of an upslope and a downslope. So say you're, you know, looking at an upslope, right? You know, like we were last night with Aussie, right? Like this move, you know, even though it was on the Fed, and a lot of times I hate news moves, they just tend to be, you know, retraced, whatever. But it was so good technically how it happened. You know, we broke the downtrend, and this was the downtrend, okay? I'll make it so you can see it a little better. This was the downtrend slope, right? There was lots of action on the median line. There was action on this upper parallel. We broke that. So what you do at that point is you look for former resistance to become support, and it did. But, you know, we also had this sliding parallel from this level here, and it did end up holding. Okay, so if this was the only thing there, I probably wouldn't have suggested doing something like going long Aussie at 77.15. But guess what? It held because you also had this, downslope, former resistance becoming support, and then new support. Okay. And now on the same token, as we come into Aussie dollar and we come into, say, a level that could be support again, we're actually not that far from it here. But if we come into, say, 77, 75 or something, 77, 75 tonight during Asia, I would be looking at that as support, but it wouldn't be as strong as if I had a downslope line there too. So I would have looked at this as stronger support if we would have been there at this point, right here, because you also would have had this downslope line, former downslope line. Okay, so, in general, you'd be looking for support between here, this downslope line, and this upslope line or the median line, okay? But yeah, to answer that question, Raj, it's really confluences. They really, are going to probably get you the most precise levels, okay? Alrighty, so we've looked at all of the dollar, what makes up the dollars, except for the yen. We'll look at that right now. So here's dollar yen. And again, pretty good looking slope, right? So as far as the sideways, down to sideways, fairly flat slope. The median line that, I focused on in the longer term piece over the weekend and everything obviously worked out pretty well. Was resistance right into this. And, if you are, of the cowboy mentality, you can obviously always just put orders and trade at these levels. But as far as I'm concerned, more of like a process and, a little more conservative with the entries and whatnot, and the defined risk rather than just gambling on a news event. But, sets up for really solid resistance, either at the median line, maybe 20 or 23.37, which is a high volume level from yesterday. It's where we closed after the Fed hour, or you could look towards, say, 23.70, and that would actually be, it doesn't look like that's tomorrow morning, actually. It's during the U.S. session, so maybe the dollar does bounce a bit into the U.S. session tomorrow. If it does, then 23.70 might be the ideal place. The ideal, Mark, what's going on? I'm here. LOL. Might be the ideal place to get short. Okay, dollar yen 123.69 is the 61.8 of the decline here. Okay, and it's also the sliding parallel. It's also this upper parallel, which oh yeah, Mark says you mentioned cowboy mentality. Yeah, there you go. That's right. I forgot. So you've also got this upper parallel, which could end up providing support, right? Possibly. You don't really know because we haven't had a whole lot of trade around it or anything, but something to be aware of. And the fact that it does cross right there is actually just interesting, I guess. So 123.70 might be the place to be for dollar yen. And again, if we look at that dollar yen chart, right? Look at the Aussie dollar chart and the dollar yen chart on the longer term. So here we are. There's that median line yesterday. Okay, sets us up for, I think, what could be a broader, more important drop. If yesterday was indeed an important high, which is a level I'm very comfortable trading against, and there's several reasons why. One of the reasons is we have bearish slope to work with, right? Right here, boom, done. Two is we have the month open right here at 124.10, and that's a very objective level. Okay, there's no ifs, ands, or buts about it. It's not a fib. I didn't draw it. It's not a slope. There's no subjectivity involved whatsoever with the month open, the year open, or any open price anywhere. And, look, it was support, open the year or open the month there. NFPs, blow off, little top, retrace, okay, wash out, consolidation. The whole process is, sounds like a pretty good top, right? So the fact that we have the month open in here and we kind of failed after spiking through it yesterday, after we'd failed here last week, and after it had been support earlier in the month, support, resistance. So it gives you a super objective level to trade against or take a stand against, right? Whether it works or you're stopped out, that's not the point. The point is that you have something to work with. You have a point of reference to trade against, and the reward to risk, you can, make it pretty high in your favor at this point if you're able to get short at, say, 123.70, 123.80, because you'd be looking towards at least 120.140 and maybe lower. Here's 120.140. Okay. So dollar yen. Aussie dollar, I wanted to show you this one, right? So here's Aussie dollar. I still have this slope on here. Get rid of it. We do have this bearish line here, which I guess gives some pause or some reason to be somewhat concerned, but something interesting too. These are basically the same slopes. Check it out. So you can draw here off the June 1st low and the June 3rd low, and then use the spike low yesterday. And I know that I said I don't like to use spikes. Raj, I will get to that in just a second, bro. I know I said I don't like to use spikes, but in this case, the slopes actually do describe action very well. Okay, so it's okay to stick with it, in my opinion. So we'll see. But yeah, 77.75 though. So look at that. If we scroll out, okay, you see these lines here, this one. If you use TradeStation, these are 25 to 75 lines. Some places or some charting packages call them the 50 lines. They're just easy ways to see if there's action around that slope. But you can see here, look, if we put the sliding parallel off of, say, off of this low down here, it's actually where we end up getting long that one last week. Or if we move it up a little bit, so it crosses these lows here, that former support comes back into play about 77.75 anyway. That's where we were kind of looking at in the first place. So 77.75 does look to be interesting as far as the Aussie dollar is concerned. And finally, here's the weekly chart. And look, we've got the sliding parallel. This is probably the more important thing to look at than the daily or the short-term stuff. You've got, what's this here, the June 8th low, August 8th, 2014. You got a high up here from October. You got a high, obviously, up here from May. And that would be resistance again, or you'd look for it to be resistance. If you broke through it, it would be really quite significant and really usher in a very different market than the one we've had for quite some time. So that's why if you are long Aussie or you're looking to get long Aussie or back, long again, then the 80 area to 80.35 or so is an area that I think you should target and definitely be aware of, and definitely look to get out if we get up there, because that could be a level that would actually be important as far as resistance is concerned. And at the end of the day, this right here is it's a range, so you're trading a broader range. Okay. All right, so I went through all the dollar stuff that I think I wanted to. I did have questions here that I am going to address, and then we'll just keep on going. So, see, Raj had Euro CAD. I'll get to that. There were some before that. Let's see. Angelo asking about the S&P, also asking about CAD. Absolutely. So we'll start with CAD just because I already have those all done, because I put them up last night. It was in last night's piece. I also put it up this morning. A place to look for a bounce in dollar CAD was sent out this morning, and we have indeed gotten that bounce. I actually bought some dollar CAD down here, ended up getting out, unfortunately, at 22.10, and now we're trading 22.40, whatever. So anyway, this dollar CAD, this is just a trend line. Back here, okay, August 2014, crosses through lows here in December, crosses through lows and price action here in May, and then here we are right now. So I mentioned, I think in the piece last night, did I mention anything about the Elliott wave scenario as far as dollar CAD? I don't know. Let's see. As an aside, Euro CAD, no, not really. All right, so I didn't talk about the Elliott wave possibilities, but if we look at the short-term picture here, first of all, we're at support, okay? So we've got CAD data tomorrow. Could end up obviously going, either way. I'm not going to predict what the data is going to do here, but from a technical perspective, we have a really solid support bounce. This is support, and the risk here for me on dollar CAD is to the upside. When we look at, this is the 4-hour chart, really like this slope. Just look at how, the market traded here and here. Obviously, this was really good downtrend support today. And look at the action on this slope right here. Okay, so this slope has influence. This is something we could be working with for quite some time. As far as resistance is concerned, one thing that really sticks out, this is a 5-wave decline, 1, 2, 3, 4, 5. We did not go to a new high here, okay, actually missed it by half a pip. And if you look at it on a close basis, it's probably a little cleaner, 1, 2, 3, 4, 5, all right. So that is bearish ultimately, but again, we could have a 3-wave correction here back to at least 2367. If we put up the fibs, you get 2395 potentially at some point next week. Something to note as well. Remember this is former support. Talked about the confluence. Raj, we were just talking about confluences. Okay. So this confluence would be 2420, and that would be like Tuesday. Okay, so again, you're not saying the price is going there because you don't know, but you're saying that, man, if it gets there, I'm ready to lay it on, right? I'm ready to put a short on at 2420, if dollar CAD's trading up there on Tuesday. If we get there earlier, you'd have potential resistance again at 2396, 618 Fibo. Of the decline. So with dollar CAD, Angelo, we are at support now. I look higher from here up to 2396, 2420. Be aware of resistance 2344. On a short-term basis, like really short-term, this is a pretty good look in advance. Would be looking to, if you want to get on the long side going into tomorrow. 2174 to 2188 could be where it's worth doing as far as getting long on dollar CAD to take it higher into 2420. Okay, for me, broader swing focus for the dollar is still lower. Trading dollar CAD to the upside would definitely be counter trend. It doesn't mean it's wrong as a trade, just means that it's counter trend. Look, there's nothing wrong with that, especially if you have dollar short positions already, like euro and if you're in anything else, you want to balance that out a little bit, like a hedge, then you certainly can. Dollar CAD would be a place to try to do it. Just be careful because, a lot of people do that and they won't put a stop on it because they're saying, well, I don't want to get taken out and then have it go the other way, blah, blah, blah. One, it's a correction, so you have to understand it might be more difficult to trade. Two, if you don't do that and your original analysis ends up being correct, the dollar is going to fall apart, and you are at downtrend support here on the short term anyway, then you're going to be pretty pissed because you're going to lose despite having the right analysis. So, but that's what I'm looking at with dollar CAD. Okay, the next thing you wanted to look at was the S&P. For me, this broke out. This is no longer bearish. So bearish slope is no longer. So I would not be looking to short at this point. We held again. So the next place, Angelo, as far as a short position, where it could occur, I'm not saying it will, but where it could occur would have to be back up here at new highs. Okay. And by new highs, I mean specifically the slope lines here. The one that connects off the May high and April high and May high comes in. It looks like looks like 2140 to 2150 over the next week or two. So that might be a place to look. That's the only thing I've got, though, Angelo, as far as S&Ps are concerned on the short side. I'm not saying it can't happen. I don't have anything on the chart. Okay, Kiwi. See questions on EuroCAD, Kiwi dollar. See, on the CAD, do you think about why the charts have the Aussie going higher, yet the CAD going lower against dollar? Not really. I don't really think about that. I mean, Aussie CAD moves too, Like, for example, Aussie CAD is a pair itself. Like, it's totally possible for Aussie dollar to go up and dollar CAD to go up, or for Aussie dollar to go down and dollar CAD to go down. It's not unheard of. So no, I don't really think about that too much. The chart is the chart, the setup's the setup. The price action for that specific pair is for that specific pair. In fact, Angelo, here's Aussie CAD. Do you know what these lines are right here? This is year open price. We could be trying to base at the year open. In fact, what do we have here? We have some really long-term support that this thing's trying to sit on. It's been trying to break it too. But as it is right now, this is a weekly chart. As it is right now, we actually have an outside week. So, an Aussie popping higher from here and a dollar CAD going higher too is not all that out of the question. Okay, so Euro CAD and then Kiwi dollar. So Euro CAD, like it higher still. Again, we had this was presented several weeks ago, but this is the big inverse head and shoulders pattern, and it did play out. It did break. It means it did complete. We did end up stopping after running through the year open price, and since then we've pulled back, and now we're consolidating. And guess where support came in? Right on the lower parallel of the new bullish structure. So we have. It looks like we have a Canadian dollar setting up to be fairly weak. If we look at it through the lens of these setups, we've got dollar CAD, looking like it could bounce from here, a little bit more. We've got Aussie CAD making an outside, reversal. We've got Euro CAD coming back to retest the inverse head and shoulders pattern. Okay. In the breakout level and holding it perfectly. So yes, I do like EuroCAD higher from here. Again, the target would be 145. That's the head and shoulders objective. You just get the price width from here, 137.65 down to 130.22. Add it to 37.65, that gets you 145.07. Okay. And if we continue to follow the slope, we could actually be there before the end of the month. So I would look at EuroCAD as well, Raj. I have a question on Kiwi dollar. Kiwi just continues to ride this lower parallel. I mean, that is it. We're getting fairly close to levels that one could consider objectives, bearish targets. Remember, the wedge target is 66.07. The 61.8 retracement of I think that's the entire decline or entire advance. What is that? Oh, no, sorry. It's 67.17 is the 618 of this move, okay, when you do a measurement. That gets you 67.17. I mean, at this point, though, trying to call a bottom on Kiwi is pretty foolish. The the first level that you could get a substantial bounce, if it happens this week, would probably be about 68.20. Okay, this is the weekly chart. Again, the breakdown below this median line now becomes resistance. If we bounce the rest of the week, it's like 70.60. In order to have any sort of bullish setup, you'd have to trade back above not just this median line, but probably this one too. So that's all I've got with Kiwi. I don't have much. There's not much to do here. There's no position to enter here. The stop's too wide. There's no going the other way on this, fading it, because we're not yet at support that would allow you to even try to do that. Even if we got down to 68.20, it's still a pretty dangerous proposition, because you have levels that are still lower that could be reached. Ultimately, by August, I think, look, Kiwi obviously pretty severe in its decline. We're 9 weeks down in a row. We haven't had that happen except for once in history. Here's a weekly chart. Kiwi, 9 week lower. If we continue lower here today, the only other time that's ever happened going back 40 years is actually here during the bear market in the 90s and Kiwi bull market. So that was 10 weeks in a row. You did end up getting a period of consolidation after that lasted for some time, and I have a feeling that something like that's going to happen here. So that was into January. We did consolidate for 2 months. If something like that happens here, we consolidate for a little bit, bump up against the median lines, which have been broken down in Kiwi. I almost like looking at the weekly better for Kiwi because it's such a big move. But let's say that we end up coming into 68.20s or even lower. 68.20s is where you'd look, I think, for the initial bounce. Consolidate between median lines, ultimately find some sort of resistance up here, and then you can continue for a final crash landing in August down here near 60, which is a huge level because you have a double top target there with these two highs from 2011 and 2014. That target's actually 59, 58.96. And you have two equal legs from the high in 2014 when measured from the top here just in May, and that's at 60.84. So you have 60, basically call it 59 to 61 as your level. And besides that, you've also got lows down here from May 2004 and 2006 in June. So that 59 to 61 area is going to be pretty big at some point over the next few months, in my opinion. As far as a trade is concerned, you want to see it start to consolidate for a little bit, at least several weeks, and then you would look for median line resistance, which was former support, to enter into. All right. All right. Okie dokie, yeah. EuroCAD. Sure. Okay, got a few questions here. All right, so dollar MEX, we're going to look at that one. Here's dollar MEX. We actually came to support today. What do you know? Support, we have rebounded. Is it a 20-day low? May 21st? Nope, not a 20-day low, but in any case, we have rebounded from support, just a trend line. If we do have a larger topping process, then we would probably want to see resistance. It's way too early to tell if that has any significance at all. That does, though, because look where the median line is. All right, so that's interesting. We can work with this now. So dollar Mexican peso, we've bounced from support. Risk right here, like right now, is probably a little higher, much like dollar CAD is, okay? Eventually, you could be working your way up to find resistance back up here. What's that, 1560 or so? So that's where, in order to get bearish dollar Mexican peso, you want to do it either at resistance, which is up here, or you do it on a breakdown below this median line, okay? All right. Okay, that's all right, Chintan. We looked at a lot of dollar stuff. Kelly has a question here. How often do you do these webinars? I'm guessing it's going to be certain like to so you can grab what looks like. Oh, okay. So yeah, Kelly. So these are this webinar that I do. This is the midweek webinar. It's on Thursday this week instead of it's usually on Wednesdays, but it's on Thursday this week because the FOMC. When there's a big data that comes out on Wednesday, I do them on Thursdays because it's silly to do them and risk the potential of everything changing real quickly. So I do these midweek webinars once a week. Mike does his intraday scalp webinars Tuesday, Wednesday, and Thursday, and then he does them Monday on Daily FX. So anyone can watch those. But so you have 4 webinars basically, 3 short-term ones from Mike, and then I do this midweek one. Okay. Oh, here, Idris, here's that Euro CAD picture. I know you wanted to see that again. Okay, again, the low back here, April low. Okay, I'm using the May 18th high. I'm using the 526 low. It's obviously a very beautiful structure, if you will, in that, look at this thing. It's cutting through all kinds of price action. The median line, we got the high up here on the upper parallel. We held the lower parallel like to the tick here on Friday. Consolidation, you have pretty low risk at this point on the upside. So, yeah. So those are really the best things I'm looking at. U.S. oil, sure. So U.S. oil, I'd have to look at the CFD for you because I know that's probably what you're trading. So we are holding a pretty big spot. Look at this trend line. This goes back to 2014, June, July, September highs. Okay, and that's where we are right now. So Raj, if you're with U.S. oil here, you have potential. This is a coil. It's a basing pattern. I like to just call it a coil. You can see all the lows. It's a rounding type of action. If this breaks out of here, and you have pretty solid upside potential. In fact, your target would be the measurement of these 2 levels, this high to this low, and added to this high. That gets you a target all the way up at 68.61. So we're trading 60 half right now. So what's that? $8, 12% from here. Okay. All right. Okay, guys. That's it. I gotta run. 1:58. I'm gonna get this up and archived for you so that you can watch it if you were late or if you just want to watch it a little more. And that's it. So interesting week. Again, we'll keep our eyes on the charts, on the slope, on the euro dollar. That's the biggest thing I want to get across right now. I still think there's huge reward to risk on euro dollar at the upside. I get it. There's a lot of tension over what's happening geopolitically. There's, all kinds of crap. But you know what? Euro's been acting bullish. We've run into median line resistance, but it's uptrend resistance. 113 to 113.30. That's what you want to see hold in order to stick with the bullish thesis here on euro. If we end up breaking through that median line, which we tried to today, haven't been able to, we break through it. I mean, it's races, off to the races. 115.30 could be resistance, but really off the races to 118 plus, in my opinion. And the timing sets up really well, right? With the next few weeks, with the dollar seasonality being so bearish in June, et cetera, et cetera, et cetera. So that's where we are, right? All we can do is ask for high reward to risk situations and try to get involved with them. All right, so that's what we're doing. Okay, everyone have a great rest of your week. Basically almost over. Have a great rest of your Thursday, a great Friday, and good luck. All right, take care.